So hi guys, welcome back to a new video. Today we are going to cover why most traders lose in 2026, will lose in 2026. This is going to be a technical reason that most traders will miss. So first thing is first, most traders don't lose because their strategy is bad, right? They just blame their strategy if they lose, but that's not the truth. They lose because they execute it on the wrong time frames. They don't know time frame alignments, and they don't know how to which time frame to use for entry and which time frame to use for bias, basically. Main problem is I've seen traders finding bias on 15-minute, 1 hour, and 4 hour only, and entering on 1 minute or 5 minute, and manage their trade, of course, on 1 minute and 5 minute. But this just create randomness, right? Because the algorithm operates on the higher time frames like weekly, monthly, and daily. So if you don't look at them, then you can't tell where price is trying to go unless you are a scalper, right? Which I know that most of you guys are not. So you cannot get directional clarity from the same time frame you execute on. So if you are using 5 minutes to execute, then you can't just guess where price is trying to go on the 5 minute, right? You have to scale in time frames. Now I'm gonna go over correct framework, the value, and break it down simply for you guys. So first thing first, you have to know a higher time frame bias / narrative on the higher time frames, right? And then on lower time, you should come on lower time frame for entry and executions. So first thing is higher time frame bias and narrative, which is gonna you should use daily 4 hour and 1 hour, and then for entry you can use 5 minute or 1 minute, anything you like, right? Okay, so let's start it. Now first I'm gonna show you a losing trade from the traders who trade lower time frames and find bias also on lower time frames, and then I'm gonna show you how you can fix it, right? So let's say we go on the 1 hour. Okay, we are not looking at 4 hour daily, one weekly, or anything like that. We go on the 1 hour. Okay, we mark out the open. Where's the open? Okay, right over here. So we open and we have expansion high, right? Now this expansion close above this, which means this is a breaker block, right? And then we would have this hourly imbalance, and we would have these highs over here, right? This high and these equal highs, right? Now whenever someone sees equal highs, they're like, oh, price is gonna go there. But you need narrative. Without narrative, equal highs and equal lows are nothing but just distractions to you. So we close above this, we have our hourly FVG, and price is trying to go towards these highs, right? So you're going to look for longs. We are not looking at the higher time frames, we're just guessing it off of the lower time frames, you can say, because there's no narrative on the lower time frames, right? And then they just let's say drop down to the 1 minute. Now first thing, you can't just know where price is trying to go first, and then you just find a PDRA and just enter off of it. If it was that easy, everyone would make money, right? So let's say you wait for 9:30. 9:30 opens up, expands higher, came lower, from some SMTs, I think. Oh shit. Okay, this low was taken on YM while it was not taken on ES or NQ, right? So you have a SMT like this, right? After SMT, you're waiting for a retracement back, right? So let's say you take out this range EQ, you're expecting price to come back into it and then long from there, right? Which looks nice, of course, because there's 1 minute BC2 and EQ, plus we have SMT and a protected low, right? Protected low. So let's say you long here, stop goes below the FEG, and you're aiming for your drawn liquidity or 130 points, anything, and it fails, and it just kept dumping for around 200 points or something. 5-0, never mind, 500 points. Damn. So this is how a trader would lose and blame it on the strategy. what's his strategy? Basically, rejection from a higher time frame period SMT, and then like entry trigger, right? Which is a good strategy, but the problem is the time frames, which I just showed you, right? Now I'm gonna show you the same day traded correctly, right? But this time you're gonna start from the daily. Okay, so first things first, we mark out the open of the week, which is over here. And we look here, we have a daily SMT, which is indicating that we are bearish for this week. Also, we have this range unbalanced, so which means we can come and rebalance this range. Plus, we have this daily order block, plus daily imbalance. So let's say this imbalance is your draw liquidity, okay? Alright, so you have your draw, which is of course lower. That means you're bearish, right? And now you have to look for the profiles, right? So we have expansion lower from Monday, and if you look here, Thursday, oh it was Friday. Friday opened high, took out the Tuesday high on NQ, not on ES, not on YM. What's that? That's a crack, right? Crack in correlation. Once you have this, you can scale down on the 4-hour. We have a read on the highs plus crack, which is very nice. Again over here, even with this high, which is Wednesday high, so we have two cracks now. One with this and the second one with this. Now this is indicating bearish. Our high time frame draw is lower. We have a raid on the highs plus two cracks, right? Plus we have this whatever you wanna call it, breaker or anything, mitigation block or whatever. Came back up into it, and we also have this 4-hour BPR, right? So let's just move this. Tapped in it, two cracks, boom, reversal. If you mark out the open now on the 1 hour, and you look here, what do we have? We have an open and expansion higher, right? There is no manipulation for the daily power of 3. What does that mean? That if there is no manipulation, there is no expansion for it, right? So no manipulation over here. What does that mean? The move up is the manipulation. If you were to like something open low, manipulate this low and then expand higher, then maybe you can be bullish, but this is not where you will be bullish. Either you're bearish or you will just not take a trade, because no manipulation, right? Expansion higher, straight expansion higher again. This is all just manipulation for the daily power of 3. Hit the 4-hour BPR, two cracks, and right at 9 AM from high of the day, and boom, reversal. So this to this is just what? Manipulation, right? Then you can scale like on the 5 minute or the 1 minute, anything you like. Reject it from there. What do you need? SMT. Have SMT with this high. Boom. If you want to wait for more confirmation, of course you can. Wait for inversion. Long from there. Stop goes above this high. Because if this high gets taken, then we can also take this, because there's a crack, right? What you can aim for either the daily power of 3 open or these lows. These lows would be the best target, previously low. And just like that, you could have caught this short instead of the long based on the 1 hour time frame. But if you look at the higher time frames, you can easily caught this short. So that's the whole point. You have to know where the higher time frame is going and just sync with it. Now, I'm gonna give you 3 rules that can help you fix this, right? First is bias must come from a higher time frame, then entry. Second is never flip your bias based on entry time frame. And third one, if higher time frame is unclear, no trades. Okay, I'm gonna explain it and then end this video. Bias must come from a higher time frame than entry. If you're entering on the 1 minute, you should have your bias from daily or 4 hour at least, bare minimum. Unless if you are a scalper, which again, I think you're not, right? So daily and 4 hour is the best for bias, and then you can scale in lower time frames, 1, 3 or 5 minute for entries. Okay, Second one is never flip your bias based on the entry time frame. Holy shit. So let's say you're bearish on the daily and the 4 hour, which we were today, on Friday, I mean, right? Now, once you come on the 1 minute time frame and let's say we kind of inverse this, right? Yeah. So inverse this 1 minute FVG, right? We reject it from there, and then we just inverse this 1 minute FVG. We have a slightly close above the fair value gap, which does means that this is inverse, right? Now, what most traders are gonna do, they're gonna just forget their high time frame bias just based off of a 1 minute inversion and try the long here. But you can't change your bias based on the 1 minute or the 5 minute, because the daily and the 4 hour holds more power. So if you even change your bias, you have to do your analysis again on the high time frames, not on the low time frames, never. And the third one is if high time frame is unclear, then that means not trade. So if you go into the day, let's say on the daily or 4 hour, and all you see is just chop, so like around here you see this, you don't know where price is going, right? Then you can't just like go on the 1 minute and just trade any FEG and just long or short. You don't know where price is trying to go, right? So just leave that, just leave it as it is, because markets are not going anywhere. So just patiently wait until the market is clear. What happened? Raid this SMT with this high, expanded lower. Now it's clear that we can go lower to this range EQ. You could cut shots from there to here, and then once we hit it, SMT, you can expect price to go higher, and just go on with that. And I've seen most traders like do this mistake and just blame it on their strategy. Most traders don't need a new strategy. They need a cleaner process with a cleaner high time frame bias. And I think with that, that's gonna be it. If you have any questions regarding this, you can ask them in the comments or join my Discord. It's gonna be in the description. And see you guys. Peace.